Hi, this is Kerry Artak with Artak Advisory, and this is the AgriTalk video supplement for Monday, November 16th. These are the markets that I'll be covering today: December corn, February live cattle, and March cotton. And before I jump into it, I'd like to ask you to go to the AgriTalk supplement or the AgriTalk segment on my website, artakadvisory.com. Scroll to the bottom and you'll see a free trial form that you can fill out: first, last name, email address, phone, a little bit about yourself. You'll get 2 weeks of the free trial, all the letters that I produce. You don't really, there's no hard sell here. I don't share your information with anyone. You won't be put into some vicious sales email funnel. You just get the newsletters. I offer a 2-week free trial, even if you've had one before, but not over the last 6 months. And, it'll include an intro call where we could talk about the markets that you trade, maybe some guidance you might need with regard to where to set proper hedges and so forth and so on. So please don't hesitate to fill that out. I'd love to see you come in and take advantage of the free trial. Let's jump into today's analysis. First, I start with December corn. Now, this is a monthly chart, a monthly continuation chart for the broader corn futures market that presently reflects the December contract, will soon reflect the March contract. And this is nothing more than a 15-year channel bottom projected off the 08 and 12 highs against this extreme low in November of 05. It held beautifully. First hit, really second hit, third, fourth, fifth hit, sixth hit. I mean, it tested a half a dozen times and held beautifully for several years. I was mentioning this channel formation on the show several years ago. We settled below it in March of this year. No significant follow through. In fact, the market by later September closed back above it. And that long-term that rejection of a long-term sell signal is, in my book, a valid sign of strength over the midterm time horizon. So bottom line here, 366 and a quarter is our base of support well into next year, and above which we should reach into the 460s, 465 half over the coming months. The timing of this is difficult. I'm thinking spring, summer, could be sooner, which I'll get to in just a moment. Let's take a look at this is the weekly continuation chart as well, more of a near-term look. This is the recent April low. I have trend defining support this week at 391 even. I don't know if we're going to test that or not, but if we do, it can actually absorb selling through the balance of December contract life, and above which this contract remains stable to bullish through the balance of its life. In other words, into later December. Not unless we were to close below 391 even, would I see a good high through the balance of December contract life, and the market then inclined to fall south into the 360s. Once again, this 366 and a quarter area, which is backed up by a 2/3 speed line, is presently at 352 even, and by later December will be actually in the low 360s. So there's some symmetry there with regard to support, but I'm not expecting to see this lower level. 391 even, rising weekly, well equipped to absorb selling through December, and above which we can continue pushing on to new highs. I don't know if we're going to see the 465 half level by December expiration, but if we close above 424 even, and this is a high area that goes back to the origins of the December contract, you can see a series of tests here, and we pushed through it actually a couple of weeks ago. If we close the week Friday above 424 even, and then it is quite possible over the following 2 to 3 to 5 weeks to reach that 465 half level, which is where the pencil is right now. And the 465 half level is one that is well suited to contain buying into summer of next year. Also a significant upside continuation point well into next year, and I'll be talking a lot about that in subsequent shows. Let's move on to live cattle. We've just rolled to the February contract, and this is sort of a big picture, and I've been talking about this really for several months, that in late July we settled above this long-term speed line, then indicating bullish continuation over the following several months into the 122 handle. Now that has not played out. I'm still holding to a 122 handle objective long term, but we've been in this two-sided consolidative framework now for several months. I still have a good base of support at 101.32, and I'm still anticipating 122.87. I'm going to say spring, summer of next year. possibly sooner. Let's take a look at that sooner possibility. Here we have, this is sort of a blown up version. It presently reflects the March contract, and I've got, well, right now you can see a December contract last on this. We're in the midst of rollover. By Friday, by the end of this week, it will be March contract, and 112.82 is a significant ceiling for the broader live cattle market, which will reflect the March contract at the end of this week. So the bottom line here is 112.82 channel top. This horizontal structure has been holding the highs the last couple of weeks. From here, we could fall back into the 101, 102 handle over the next 2 to 3, 3 to 5 weeks, perhaps, where we encounter long-term support shown in the previous slide. But given the 122 handle longer-term objective, you shouldn't be surprised if at the end of this week, the March contract settles above 112.82. And if it does, then that 122.87 level that I showed you a moment ago, and that's really what we're looking at is this structure here that I just shown you in blown up fashion, 112.82, 122.87, 3 to 5 weeks, I'd say, where we can actually top out into next summer. So I'm just going to re-clarify this. We have 112.82 ceiling. I'm talking through the rest of the year, below which we can fall back into the 101, 102 handle, where this market, by the way, can bottom out into spring, summer of next year, and once again, above which the 122 handle remains a big picture objective. Sorry for jumping around so much here in these charts. Finally, March cotton. This is big picture reminder. We settled above this channel structure in September. It's presently at 62.52. And I've been saying, don't be surprised that if by summer of next year we reach into the 92 handle. And this is something I'm going to hold on to so long as we continue trading above the 62.50 long-term descending channel top. Buy signal above. I know it's a bit of a long shot. Not a long shot. I don't think it's a long shot. I just think there's no clear indication of 92. It's just that this structure was so long-term in scope, and having settled above it, there's an updraft now that could yield a 92 handle in the coming months. Along the way, I've got decent resistance in the March only weekly chart. 75.50 this week, rising every week by early December when the 77 handle. This is our ceiling for the March contract that can contain monthly buying pressures when tested. And if we settle above this channel top at the end of any week, for instance, above 75.50 this week, and I don't see that happening, then that 92, let's go back to this chart. If we settle above the 75 handle resistance in the coming weeks that I just showed you, this 92 handle becomes a 3 to 5 month objective. In other words, spring of this year rather than summer, of spring of 21 rather than summer. Let's talk downside, and this is what I'll leave you with. We have channel support. Bear with me. We have channel support at 67.86 this week. And I don't see that being tested either. But if it is, it can also contain selling really into later winter. And from here, we can rally into the channel top resistance in the 75-77 handle that I showed you a moment ago. So these two charts are really sort of a two-sided framework, but a definite upward bias, as you can see, with regard to this multi-month channel structure, about 8 months long. And it is respectable. For the March contract, we could actually trade inside this formation into March trade perhaps, but as I say, this updraft could actually result in a settlement above this 75 handle resistance right here, and if it does so over the next few weeks, then the 92 handle target is likely to be realized within 3 to 5 months. That is all I've got to say actually for this week's AgriTalk video supplement.
So do yourself a favor, fill out the free trial form on this website, take that 2-week test drive. You've nothing to lose and much to gain.